Hello everyone and welcome again to our property insurance power panel here at Insurance Business TV. We're here for the Q3 edition, and we'll be taking a look at everything from weather-related losses to market consolidation. And to take us there, we welcome back Chiara. She is AVP, Senior Production Underwriter at FM Affiliated, and Laszlo Szentmiklosi. He is SVP, Broker National Corporate Leader Real Estate at Marsh. So let's dive in. And following Canada's record $8.5 billion in weather-related insured losses, have deductibles, sublimits, or capacity availability changed for commercial properties in flood or wildfire-prone regions? That's my opening question. I'm going to throw it first of all at you, Chiara.
Hi, Paul. So in the insurer space, a lot of the losses, unfortunately, have not been driven in the commercial space. But what it does mean when we do have a concern is we definitely are still keeping up with sublimits. With that being said, the market is changing. So capacity and the terms and conditions so far have not driven by those losses.
Okay, so some changes, but perhaps not drastic changes. Is that how you see things as well, Laszlo?
Good point, Paul, and good afternoon, everyone. Good morning, everyone. And Chiara raised some good points as well. Yes, I think it's also important to first differentiate the personal lines versus commercial. We did see, as you mentioned, Paul, we recorded the highest insured loss year ever in Canada with $8.5 billion in 24. We do see mostly translating that into and impacting the personal lines. We also did see in the beginning, particularly in 24, 23, that commercial lines carriers wanted to change / increase deductibles for certain cat exposures such as wildfire and flood. But fast forward 24 and definitely 25, the improving market conditions balancing those efforts off. So we are seeing increasing capacity, oftentimes over line capacity for renewals, particularly for well-performing accounts. We're also seeing rate reduction. So while there were efforts of making changes to terms and conditions to perhaps manage risks for the insurers, the market conditions improving also resulted in essentially for the carriers to remain competitive, to essentially give up on those efforts.
What I'd love to know, Laszlo, as well, is that in an environment like this where we're seeing pricing volatility or coverage gaps in standard commercial property policies, have brokers seen a push for parametric or alternative risk transfer solutions in Canada?
I think that's a very good point. Overall, parametrics is a good solution to cover some of those exposures that even if the actual claim occurs, the actual event occurs, you don't need to sustain actual damage to your property, so you can still guarantee a payout. From Canada perspective, because the affordability of the insurance has significantly improved as a result of the improving market conditions, we are now seeing decreased appetite with respect to parametrics. I think, however, it is also important to note that in addition to the parametric solutions, insurers are also trying to manage on their end with some proactive approach. We do see increase, for example, how they offload their risks to other investors, which can directly impact their ability to remain competitive and also for the client's performance. For example, catastrophe bonds, as insurers try to offload their risk in 24, they placed roughly about $17.7 billion overall in a year. This year, up until July, the catastrophe bonds volume already surpassed the $18 billion mark. So everyone tries to be proactive and even creative as to how they manage exposures. And speaking of creativity, that's what we also see from clients, because they still remember the hard market conditions and those impacting the affordability of insurance. It does not mean that the clients just want to take advantage of the improving market conditions. They also proactively want to explore solutions going forward. What happens if, again, market conditions will impact affordability? So we're still seeing appetite to explore parametrics or any other alternative risk transfer solutions so they can be well prepared.
Okay, so the appetite is there. Is that something that you would agree with as well, Chiara? And also, what about those accounts that perhaps don't have those losses?
So certainly with the market softening, we're seeing a lot less of a request and appetite, whether it becomes increasing deductibles or looking for alternative risk transfer solutions. However, those accounts that do have poor loss history or maybe are more exposed to natural catastrophe, they are still looking at those options. It's definitely with less interest than last year.
Of course, something that's been changing in the market of late is some recent industry consolidation, of course, that Affinity Travelers acquisition caught headlines in recent times. So, Chiara, have you noticed any shifts in capacity, specialization, service offerings for commercial property coverage?
I would say as a competitor to those markets, I haven't seen a significant change. I have seen a little bit more of a capacity increase, but I think that's partly driven by what we're seeing in the market rather than maybe the merger. I do think it will take a couple years for any of these acquisitions and consolidations to actually affect capacity in terms of conditions.
Okay, so perhaps it's a little bit too early to speak on that one, Laszlo, but there have been quite a number of mergers in recent times in Canada, of course, thinking about the RSA Intact deal, for example.
That's correct. That's a good point. And that merger and acquisition also took some years to actually materialize. We are monitoring the market, of course, and to Chiara's point, I think it is too early to see any changes, any impact because of the recent Travelers merge. We are monitoring the changes, and I also agree that because of the changing and more competitive landscape, we don't really see any direct impacts on capacity, if not alone in general. We're seeing market conditions improving. Therefore, carriers have more appetite to deploy capacity at this point of time.
To change pace with you both a little bit, of course, there's been a lot of attention on sustainable property rebuilding. So we're talking about green materials, energy efficient installations. Are Canadian brokers really consulting with their clients a little bit more on those issues now, post-loss? And indeed, are insurers actually incentivizing this through premium credits or policy conditions? Chiara, I think you might know a little bit about that.
Yeah, so coming and working part of the FM group, our company offers a climate resilience credit, certainly on the FM size accounts. And we do work with our clients through as well a climate resilient report. So that's something that we kind of offer our insureds to help them improve it. I will say on the other hand, one of the things they do have to get concerned with some of the green materials like mass timber is how it's going to perform in a loss. We don't have the history yet to say this would be treated the same as, let's say, non-combustible risk. While it is green and we want to support that aspect, we do want to protect our clients' facilities.
Okay, so there is some support available, Laszlo?
Yes, Chiara is a good point. FM being one, if not the only carrier that does provide climate resiliency credit for their clients, supporting their efforts. But in general, we do see that from both the carrier side and from the client side, there's an continued increased focus on ESG, climate and sustainability overall. Obviously, it impacts their overall operation, efficiency, and they also would like to make sure that they are sustainable from overall operation perspective. Now, in addition to the insurers, obviously brokers also have tools, ESG, sustainability, or even just climate resilience reports perspective. So again, both brokers and insurers have those offerings. We definitely recommend each client and every facility to tap into those resources, explore those resources, so they can actually set up their own plan, make informed decision, and also become actually aware of the potential cost, short-term investments, and also long-term consequences. So while there are some supports from carriers such as FM, obviously it requires on the clients and some investment. That's why it is critical that they explore those options so they can make the right decisions for themselves.
So we've set sail on something of an odyssey through all of the big commercial property issues on this call, from acquisitions to green refits and so on. But one more to throw at you both, which is how are vacancy or redevelopment risks, so I'm talking about things like repurposed office to residential conversions, how are they being handled at renewal, given the heightened underwritten attention, I guess, both now in Canada and the US, Laszlo?
I think you raised a good point as far as heightened underwriting attention for sure. Vacancy was always one of the primary focus points for carriers and remains the focus, despite we are seeing improving market conditions, meaning that carriers are increasing gradually their appetite to take on vacant properties. They still have a high focus on understanding the procedures, policies, overall supervision of those facilities and locations that are vacant, just to be able to manage the risk, mitigate the risk, and be prepared for actually avoiding some of the claims. Obviously, it is also of our clients' best interest as well, but it also does impact the overall construction, because if a facility is going to be vacant, that is not going to produce revenue. So it also does impact the overall insurance and placements and how you need to structure the appropriate insurance to make sure you're still covering the client's exposure.
Of course, I guess ultimately, Chiara, this is all in the handling as well, isn't it?
100%. So, as an insurer, one of the things we want to look for when there's a loss is, do you have coverage which allows you to repurpose? Understanding if you had a loss at an office, you may want to turn it to a residential. It's also something I think brokers need to consider when they're working with their carriers, whether that particular carrier has the appetite for the change in occupancy, that could be a concern in terms of placing coverage.
It's a brilliant panel once more. Huge thanks to you both for your time. Remember, the band will be back together again in Q4, but until then, keep it right here at Insurance Business TV.